So a little bit about Riverwoods. Riverwoods, these are our communities. We have 3 locations in the state of New Hampshire. Riverwoods Exeter, which is our flagship or founding community, opened in 1994. It's our largest of our 3 communities, featuring just under 400 independent living apartments and cottages. In the middle, you'll see Riverwoods Manchester, that was formerly Birch Hill, starting in 2016. That has about 140 independent living apartments and then 18 brand new cottages that will be opening in 2024. So some exciting times there. And then the third is Riverwoods Durham, that opened November of 2019 with 150 independent living apartments and just a little bit about a mile outside of the downtown University of New Hampshire location. So 3 wonderful communities, part of our Riverwoods group. A little information about a CCRC, or what we continue to call a continuing care retirement community. There you go. Bill's excited to get going today. Yeah, we're basically an insurance product regulated by the state of New Hampshire, where residents will come in as independent residents. And then as their needs will change, we'll continuum of care, move to assisted living, nursing care, or memory support in the community that they already know and trust. We have an entrance fee that has a refundability factor of 70, 80, or 90% based upon the community. So it's a great asset preservation option. And then a monthly service fee that takes care of the wonderful things that take place in the community based upon dining, music, art, fitness, and all the different programming that takes place in the community. So again, if anyone has information or questions about a CCRC, certainly you can reach out to any of our 3 communities of interest, and one of our sales counselors will be back in touch with you. Moving forward, our presenter today is Bill Weidacher. He is a broker with the Keller Williams Fine Homes Group, if I can get all that out of my tongue here. He's been a full-time realtor for more than 40 years here in the state of New Hampshire and around New England, has extensive service at local, state, and national levels. So I'm going to turn it over to Bill to go through the presentation, and then we will take questions again at the very end. Remember to use that Q&A box at the bottom of your screen. So Bill, it is all yours.
Well, thank you, Dan. And yeah, it makes me sound very antiquated when you say more than 40 years, but it's just been 40. And I started young. I was 21 when I started in the real estate business. And for those of you that are doing the math in your head, that makes me 61 years old, 40 years just this past February. So just 40. Today's program, we're going to cover, first of all, who is a realtor, what is a realtor, and the representation that they provide. We're going to look at the history of the market briefly in the last about 30 years. We're going to talk about the condition currently that exists in the real estate market, because that's the most important thing for those of you that have a home that might be considering moving. Whether or not it's a buyer's market or a seller's market, because you hear all kinds of headlines from a national scope, and we're going to sort of bring that down to a little bit more of a local level for you in our next bit of time together here. We're going to talk about the process of buying and selling in the marketplace briefly, and then we'll have some time for Q&A. And of course, as Dan said, you can put your questions in the chat. And matter of fact, we've already received some in advance today, so that's exciting for me, because that shows the level of engagement that you all have here today. So first and foremost, the realtor brand, if you will, is just that. Not all real estate licensees are realtors. As a matter of fact, there's close to 20,000 licensees in the state of New Hampshire, and there's about 8,000 realtors. Those who are most active are members of the National Association of Realtors, and they are governed by adherence to a code of ethics that they've got to subscribe to. We're going to talk a little bit about the fact that there's different forms of agency. There are realtors that represent buyers, there are realtors that represent sellers, and then there are realtors that do represent both. And all of that is disclosure related, meaning you've got to disclose in the state of New Hampshire who you represent, if you represent the seller, the buyer, or both. Let's talk about the market, and the next handful of slides we're gonna cover just that, but I'm going to give you just a brief overview first. Single family residential home prices in 2022 reached a historic high. $440,000 was the median sales price in 2022, and that capped off 11 straight years of price increases. If you go back to 2013, you can see that prices were $220,000 average sale price then, median rather, sale price, versus the median at $440,000. So it has been a doubling of home prices in that period of time. Interest rates, comparatively speaking, are still relatively low. However, if you look at where they were a year ago at this time, they've essentially doubled. We actually hit in November of 2022 7%, and we'd been in the low threes prior to that, the beginning of the year. So based on just what you've seen with the Federal Reserve trying to gain control over inflation, that they've steadily increased the Fed funds rate all of 2022, and then of course yesterday raised it again another 25 basis points, and I'm sure we'll have some questions about that as we go forward. First and foremost, the first 2 months of 2023, we see that prices are still increasing, and we'll get to those numbers versus this time last year, versus 440 versus where they are today. So prices are still on the move, although we're starting to see a little bit of a stall there. We'll get to it. So this gives you an idea of the prices breakdown and the breakdown by county. So we've got the statewide number, which I'm just going to hit here very quickly. You can see last year there were about 14,500 single family units sold last year, which represents a decrease in volume year over year of 17%. And I'm here to tell you that that is completely inventory related. If we had more listings on the market last year, we would have sold every single one of them. The market was that good. And that's why, the median price, as we said before, is $440,000, which represents an 11% appreciation rate over the previous year. So that gives you an idea of how great the asset that is your single family home performed in 2022. I want to take us on a little bit of a historical ride here, and some of it will be a roller coaster, and many of you will remember this because you were along for the ride. I guess where I want to go with this is I want to go with just the right hand, the two right-hand columns here on this chart. And you'll notice that in 1998, the median price for homes sold was $127,500. Not that long ago, comparatively speaking, but you can see the increase: 99, 7%, 2000, 15%, 2001, 14, followed by another 15, followed by another 11, followed by another 10, followed by 6. You just got to realize that 112% increase, obviously not sustainable. And that was from 1998 to 2005. And you can see the building of what we now know, looking back at it, was a housing bubble. It was the government placed its bet post 9/11 on housing and automobiles, and things took off because interest rates were favorable, and access to credit was also easy. And so there were people that were buying homes that probably should never have bought homes. If you look back at that housing bubble, you know that to be true. So that takes us to 2005. Here's 2006 to 2011, and it's called the big slide. And we had a 24% correction in the real estate market. And you'll notice 2006 and 2007 started off slow. It really was just sort of prices hit the peak and then backed off a little more. And then, of course, we know with the financial crisis, the Great Recession, what took place. And you'll notice 2008 and 2009 both represented 10% decreases each year. And then a small correction upward in 2010, and followed by, again, another 6% decrease in 2011. So that 24% correction in pricing down to just above $200,000. So I'll go back to this slide. You'll notice in 2005, a $270,000 median sale price versus the end of 2011, the median sale price was $201,000. So that gives us a little bit of an idea of what took place up to 2011. And then, of course, here we are in the modern era, so to speak, from 2012 to 2022. And you'll notice in that period of time, 118% appreciation. You look at 2013, which is where we said prices have doubled, 220,000 median sale price in 2013 versus the end of 2022, 440,000. Again, I want to just guide your attention to the fact that we saw steady increases in pricings. I'll go back to 2013, and I'm going to tell you that what we see there, that 9% appreciation from 2012, most markets, when they correct, overcorrect. And the fact that we rebounded in 2013 was really overcorrecting, canceling out some of the overcorrection. Meaning this is that 202,000 as a median price was probably a reaction to the previous 3-4 years. And then to the point where when bottom hit, people started realizing that bottom had hit and prices started steadily appreciating. You'll notice single digit levels of appreciation all the way up to 2020. We don't need a lot of historical perspective to look back to 2020 and say what took place there. We know that 3 years ago, we started to, because of the reaction to COVID-19, if you'd asked me in March of 2020 what was going to happen in the real estate market, I would have told you my best guess would be that it would freeze, that there wouldn't be anything, that people wouldn't be doing a thing. And the opposite was true. Once housing was recognized as essential, people started coming out of the woodwork to buy houses. And when they started to realize that they could work anywhere, and that anywhere could be where they wanted to live, New Hampshire became even more favorable. So we really were the tip of the spear, so to speak, on this housing advance that we saw in terms of our demand and inventory. Right then started to become an issue. So you see the prices increasing 11, almost 12% in 2020, almost 18% in 2021, 11% in 2022. It makes me wonder because I do know that prices are still up the first 2 months of this year. And we'll talk a little bit about that because of the fact that it's inventory driven. It's really always about, when we talk about demand and supply as these sort of key essential tenets in economics, well, in the real estate business, it's all about the supply and the fact that demand really has not diminished, in spite of the fact that interest rates steadily increased. Inventory had been high 9 to 10 years ago. We had seen, to give you some perspective, back in the 2012, 2013, the inventory had touched almost 13 to 14,000 single family homes on the market. To give you some perspective as to what that means, today in the entire state of New Hampshire, we don't have 13 or 14,000. We have 850. You take a city like Manchester with 115,000 people living in the city. It's probably shocking when I tell you that as of this morning, there were 21 houses on the market in the entire city of Manchester. There are 5 properties on the market in Goffstown, 3 in Hooksett. That just gives you an idea how little inventory is. It's a huge opportunity for those that are going to sell in this upcoming 12 months. With decreasing inventory, obviously, we know prices have been steadily increasing. And how low, I just gave you some perspective, but we had a shortage before the pandemic. And of course, we have an even greater shortage now. And there is some anxiety out there about being involved in the home buying and home selling process, meaning, oh my goodness, how is it going to be? How's it going to work in this kind of an environment? And that's sort of where your professional licensee, realtor, if you will, is there to help. There's sometimes with this uncertainty, there's this inclination to stay put. And I'm going to tell you, if you're thinking about the market, I do believe we have an opportunity here. Whether that opportunity is going to continue to exist, my experience has always told me that when markets change, they tend to change abruptly. Is in the 40 years I've been doing it, it's sort of like all of a sudden you're at a party and you notice that the punch bowl has been removed. That's kind of how quickly real estate markets can come to an end. You go, well, the party's not over, but looks like we're getting signs from the host that it's time to leave. And I think we're not quite there yet, but I believe that the next 90 days is going to tell us a lot about this real estate market and about this economy. Inventory shortage is really more at a crisis level, which if you are a seller in this market, it's a great market to be in because of that, because prices are still at a pinnacle. Again, inventory, we're going to talk a little more about that. This gives you an idea, this graph here. Now, this is from the February numbers, and I just told you we're even lower than that now. We're 850 single family, the gold number, single family homes on the market right now. And you can see that you get a breakdown there from February of 2023, 2022, and 2021. And it really doesn't tell the whole story because we've never been as low as we are today. Never been this low. That chart at the bottom of your screen there shows you that we were tickling the gold line shows you we were tickling close to 15,000 in 2011. And you can see it's been steadily decreasing to the point where we are, again, around 1,000 houses is a low number. And that's single families. Condos even lower. This morning there were 330 condominiums on the market in the state of New Hampshire. Moving along, are we in a buyer's market or a seller's market? So let's just quickly define what that means. Buyer's market, lots of inventory to choose from. Buyers really have all the leverage. There's a greater selection of homes available. And then sellers in a buyer's market typically are willing to be more flexible and offer incentives, pay closing costs, leave things behind, tractors, furniture, livestock, depending on what you're selling. They're willing to be a lot more flexible in order to sell the house. That's the buyer's market. And then, of course, a seller's market, the inventory is very low, like it is now. Sellers have got leverage. We're going to get it to a chart here in a minute where you'll see how many months of supply there is on the market to give you an idea of how much leverage sellers have. There is in a seller's market, especially the market that we've been in, we've seen lots of multiple offers where you have a property to sell and you've got 10, 15 buyers that want to buy it, all putting offers on the table. And because of that, all competing against each other, a lot more cash offers or if not cash, waiving financing altogether, saying it's not conditional upon me getting a mortgage. I'm very comfortable with my ability to get one. You'll even see in some cases buyers saying, I'm not doing a home inspection. I'm willing to let you live there as long as you want. After closing, you want 60 days, 90 days, 120 days, I'll make it work. And buyers in multiple offer situations that we've seen, they're obviously more likely to offer over asking price. And so you hear from your friends and family members that have sold houses in the last few years, oh, I got $25,000 over asking price. I got $50,000 over asking price. And that's because in markets like this, buyers are willing, they are so in need of housing, they're willing to pay more than the seller is asking. And so the first offer that's being made out there in the marketplace is actually from the property owner, the seller. They're the ones making an offer to the market saying, I'm asking $440,000, and the sellers make that first offer out to the world, and the world responds by making offers back. I want it, I'm willing to pay $440. I want it, I'm willing to pay 50 over $440. You get the drift, but buyers are more likely to offer over the asking price. Now, a balanced market means just that. There's no real leverage. There's buyers and sellers, and it's in sort of complete balance. Well, that really is because there's enough inventory, and a balanced market has been considered for a long time, as long as I can remember, about 6 to 7 months worth of supply, which means this: if nothing else came on the market today, it would take 6 months to sell all of the existing active inventory, 180 days. That's considered a balanced market. I wonder now, in the new world that we're in, when we'll ever see 6 months worth of supply, and whether that will be considered more of a buyer's market if we ever get back to that point anytime soon. And it's possible. I'll show you here in a moment. Here's what month's supply looks like. The gold side of this graph just shows you we've got 1 month worth of supply. 1 month. Nothing else comes on the market. By the 23rd of April, all the houses that we've got on the market will be gone. That's an oversimplification, but that's essentially what we have. We have a month worth of inventory. And so to get back to the 6 months seems like a long ways away, and yet we were there in 2016, just there. And that seems like a long time ago, 7 years ago, but you can go back to 2010 and you can see on this chart right here, we were at about 18 months worth of supply. So that gives you an idea what the market was like back then. We had 180 days and then some worth of supply. So we've got, for condos and single family homes, essentially a month's worth of supply on the market. That's good for you, the property owner, if you're considering moving in 2023. This part is what I think can affect demand, and that's affordability. You know, based on what we just covered, that prices have been steadily increasing. What else has been steadily increasing in the last year? Interest rates, mortgage rates. We've seen mortgage rates effectively double. Now, so to give you an idea, what that means is that the affordability index, I'll just take you to this left side of the chart here. In 2021, the affordability index for single family was 114. You'll notice it's been steadily dropping, 96, 72. What does that index mean? Here's what it means. It measures your affordability, and it just says this, that the median priced home under prevailing interest rates reflects what the median income earner in the state of New Hampshire was making. So to give us a sense, in 2021, the median income earner was making 114% of what was required to afford a median priced home at the prevailing interest rates. So they were making in advance of what was necessary. They were overqualified. Now, you notice what's happened here in 2022. They were making 96% of what was necessary to qualify for a mortgage. And then, of course, in 2023, you see that number so far this year has dropped to 72% of what is needed. Now, this does not mean that people can't buy houses. What it means is this, is that's the median income earner, singular, not plural. There's a lot of people buying with two incomes, but we're tracking this affordability index on one income. And we also know this. Not everybody is buying, they buy less house if they can't afford a more expensive house, or eventually the market will stall. The market will get to a point where buyers just can't buy. Now, the good news for you, the property owner, has been this. Rental prices have been steadily increasing also. So there's been no relief for somebody that says, well, I'll just rent. Because that being the case, just renting has been steadily on the increase as well. Rent.com just released some numbers that said New Hampshire has seen the highest rental increases as a percentage in the last year, close to anywhere in the nation. So that gives you a sense of the fact that there's not really been any relief on the rental market either. And that's really because there's not enough stock out there. We've got about a 1% vacancy in the state of New Hampshire. So back to housing affordability, this plays a big role for those buying houses because as rates have increased and prices have increased, that affects affordability. Makes sense. I'm sure you agree. What's happening locally? Well, Tip O'Neill said years ago that all politics is local, all real estate is also local. And I'm gonna give you just some quick numbers. Know this, that if you need a further drill down, you can certainly reach out to me, like what's going on in your town, what's going on in your neighborhoods, that kind of thing. So the purposes of time here, I've got 3 counties, Hillsborough, Rockingham, and Merrimack County, and what that means. And you'll notice that, new listings, again, we do not have enough new listings coming on the market to satisfy us. I will bring to your attention, if you look at median sale price. So 2022, we were at $435,000, and through in February, we were at $460,000. So that gives you an idea of where things are. At least the February numbers up 5.7, call it 6% year over year. Now, I want to bring to your attention the median sales price year to date, because the February numbers reflect what happens in December, early January, because properties close within 30 to 60 days. The February numbers tell us really what took place prior to that. The close numbers year to date reflect the January numbers, which come to, at least in Hillsborough County, the fact that the January numbers, meaning the properties that went under agreement in November and December, were less. And I think that's a direct reflection of the fact that the market started to show some signs in and around the 7% mortgage rates of stalling. So keep in mind, as you look forward to the year here, what happens with mortgage rates should they tip back towards that 7% number. So that gives you Hillsborough County. We're going to go to just a little bit of a better chart for you here to give you an idea of what the closed sales looked like. Again, closed sales are down 2023 versus 2022. Why is that? It's the lack of active inventory. It's not because of the demand. I run numbers every single day in the markets I look at, and I ran them this morning for the radio program that I was doing. And the buyers in the last 7 days in Hillsborough, Rockingham, and Merrimack County had outstripped new listings 1.71. For every new listing that came on the market, 1.7 houses went under agreement. So that gives you an idea that the demand is still there in those 3 counties. Median sale price, again, gives you a little bit of a sense of what's going on there. Prices are up. At least through the February numbers show that. And year to date, they're not quite flat, but they're down a little bit year to date. And I expect that'll rebound when we look at the year to date numbers, when we get the March numbers in total. Merrimack County, you'll notice again, that gives you an idea of where things are. Look at Merrimack County and the median sale price year to date, up 16%. And then again, look at the median sale price for February, up 25%. Merrimack County, really hot. And part of that has been, Merrimack County, of those 3 counties, Hillsborough, Rockingham, and Merrimack, has been a little less in its median pricing. And therefore now, because of demand and affordability, a little more affordable. And you'll notice that's the big increase in prices as a percentage. Merrimack County, again, that gives you a sense. Again, closed sales down year over year, 27% in February, 21% year to date. And there you see the price increases. Again, totally inventory driven. If we had more listings, we would sell them. So if somebody says to you, closed sales are down this year, that's true, but that's only part of the story. They're down because there's just not enough inventory. Otherwise, we'd have more closed sales. Rockingham County, this is the crown jewel of the 3 counties, and at least as we grade it towards median sales price. And that's because of the median is pushed higher because of some of the coastal prices, Portsmouth, Rye, Newcastle. You get the point. There's oftentimes there's 2 commas now in some of those prices. So that helps pull the median sale price up. Again, you'll notice, you look here, year to date and February, those numbers are down just a little bit. What that means, it's interesting to me because when I look at it, I start to think it's a little too soon to start saying, well, maybe we're at the peak. If we were doing this in April, I'd have a better sense. 1 month doesn't make the year, but it certainly, it might indicate a trend. And I don't think we're there yet to be able to say for sure. We'll see what the March numbers look like and the April numbers look like. And of course, this is just the same breakdown of what I just told you. Again, closed units down, and that's totally inventory driven again. The chief economist for the National Association of Realtors, Lawrence Yun, really says it this way: 2023 presents an opportunity for some normalcy to return to the market. Mortgage rates are expected to stabilize as home sales and prices moderate, welcoming more Americans into the housing market who may have been stuck on the sideline. It remains to be. Lawrence Yun's remarks now are just a little over a month ago. And here's what I'm here to tell you is the last 30 days, the last 14 days have been quite interesting. And we'll have to wait to see what this means in terms of the market as we look at the Federal Reserve and the banking issue that we're seeing going on in the last 2 weeks. For buyers, it's this: prices are increasing, but you know what? Still a lot of opportunity out there. Interest rates are lower than they were in the fall. Houses are still not easy to find. And here's what I know. In this marketplace, technology is not a friend of the buyer, meaning the internet. By the time the buyer finds out about a home that's coming on, I know about listings that are coming on the market today, and the internet doesn't know yet. Zillow doesn't know. You get the point. For sellers, just take advantage. Prices are historically high, inventory's low. As I said before, we have multiple offers and you got the leverage, and the best time to sell is right now. It's the spring market, and again, we're in a pretty good inventory situation. The points you really got to take home with you are this: if it's a seller's market, what do? Well, you got to get ready. You got to start talking to professionals, talk to a realtor, call them up, get them in, start to think about what pricing strategies you might want to employ. They can go through and look at the property with you and help make give you some really good advice. Oftentimes people will spend all kinds of money on a property prior to calling a realtor, only to find that they might have spent the money in the wrong places or shouldn't have spent it at all. And then, of course, property preparation is a big thing these days. This, people buy with their eyes in just about anything. And, a property that's properly prepared makes a big difference, and even in this market. I kind of flew through those, Dan, only because I wanted to make sure we'd have time for questions, because I do think we're in a unique time here, and there might be some timely questions that the chart may not have covered.
Sure. So again, if anyone on this webinar today would like to ask a question, please use the Q&A box at the bottom of the screen. As we do have some time, which is great. Bill left some nice valuable time for us to ask some questions. We have a few that have come in, and I will be sharing those with Bill. So again, please submit your questions as we go along here. So I'll try to read them in order, Bill, and if there's something that you want to elaborate more on. Who are the current buyers, and what do you project the impact of the future rate hikes to be?
The interest rates, I think, are going to be on the move. The fact that the Fed raised the rates 25 basis points yesterday will have an effect on mortgage rates. It hasn't really sugared into much of anything yet, because I think some of it was baked in. I do believe the Fed raising the rates. I'm in the interest rate business, if you will, right? As mortgage rates go, so does the real estate market eventually. And I was glad to see that they were able to raise rates just a bit. There's no doubt that we've got to tackle inflation. And if they made no move yesterday, Dan, I think I would have been more concerned, because the Fed would have indicated that they were more concerned about this banking issue and whether or not it was a crisis. So what was the first part of the question?
Let's see. Who are the current buyers? And I guess that was the first part of the question.
Yeah, the current buyers are across all price points. We are selling homes north of $1 million quite easily. We're selling first-time home buyers. If you put a home on the market, first-time home buyers are gobbling them up. They are not fearful of the market. Because they know they know if they lock in a property today at a certain price range, at a certain mortgage rate, should the rates move downward, they can just refinance, right? And we saw lots of that take place over the previous 10-year period. There was a huge refinance market. That's kind of not there now. I do believe that rates, once we get control of inflation, I don't know that we're ever going to see rates in the 3s again. I just don't think so. But I do believe we'll see rates in the 5s and maybe the high 4s. But we're really talking 5s and 6s going forward here, in my opinion.
Great. This is an interesting question. How does a broker engage buyers and sellers who have unrealistic expectations about their property for a fair market price, and how will the economy support that?
Oh, well, in just about every market. What was it? Did we have another question?
Yes, we have some more questions. Is the sales commission negotiable? Might a person get reduced with the higher sales prices?
Yes, real estate fees are negotiable between you and your broker.
Easy question. Good deal. What about neighboring states? How does the market look maybe around the New England market? I guess would be a good question.
Supply is an issue in just about every New England state. And I will tell you, my wife's pretty active in the Boston market. The Boston market is starting to show softening. Properties are staying on the market a little longer, and prices have sort of peaked. So I think suburbs are a different story in Massachusetts. You get north of Boston, it feels very much the same as New Hampshire, Dan.
Okay. From your home's assessed value, can you project a likely sale or listing price?
Not easily, because the assessed value takes into account what it is really. Towns and municipalities assess the entire town all at the same time, and they make this decision at that point in time what every property is going to be worth. And so if your municipality or town reassessed 3 or 4 years ago, they were doing their best guess to what property prices were actually worth then. Now, we know that prices have gone up, generally speaking, and you have to take into an account what's called an equalization factor. And if you don't know that, you can't really nail down what the town really thinks your property's worth. They tell you what the assessed value is, but don't sell for the assessed value in this marketplace. There's lots of automated valuation models out there that can give you an idea based on your property and how it's recognized by the tax assessor. I'm going to tell you that they're wildly all over the place, and your best guess to try to figure out what your property's worth in this market is competition-based pricing. What are your competitors with houses like yours getting for their house? What are they asking? Because it isn't just what it's sold for. Because think of it this way, Dan. We know that prices have gone up 10, 12, 15% in 12 months. If you base the price of your house on a sale from last year, you could be underpricing it. So it's really, you got to come down to what your competition looks like right now in the marketplace. So assessed value or a guideline, but certainly not your best way to price your property.
Very good point. This is a good question too, and maybe more seasonally, but how difficult is it to sell a home around Christmas time, or maybe we should say winter versus spring in that particular case?
Yeah, it's interesting because we've done some research on this, and the fourth quarter of the year, you're just as likely to sell your home fourth quarter and first quarter of the year as you are in the second and third. Now, reason being is because there is less property on the market, and because of that, there's even less competition. We're talking about low inventory, and then during the holidays, there's even less. And I think holiday season's a great time to be selling a home for those that are thinking about selling during the holidays. It's houses never look better. They're decorative, they're festive, they smell good. There's lots of reasons that the holidays are not a bad time if that's when you're going to sell. It's just as good as the spring market.
Right. I'm going to answer a couple questions that are coming in about Riverwoods or CCRCs. The space behind me is our living room at Riverwoods Durham. So if anyone's wondering the space that is in my backdrop, someone asked that question. So that's our living room area just off the lobby at Riverwoods Durham. Someone asked about the wait list at Exeter or Riverwoods Exeter. I guess inventory is low at CCRCs as well, if that's a question. The wait list can be ranging anywhere from 2 to 6 years based upon the apartment or cottage that you might be looking for. Again, reach out to your direct sales counselor. They can give you more information on the particular apartment or cottage in that case. Let's see. Is the market in Southeast Maine and Northeast Massachusetts in the same state? Interesting. I'm not sure about the state, but maybe it's in the same market or scope.
Yeah, same state of affairs. I can't speak to Maine because I just don't know the answer, but I can tell you what I believe, and my belief is I know from from North Shore, the North Shore tells me that the market's still very strong. And I have agents that work on my team that sell in the North Shore. And I know that that market is just the same as we're seeing here. I gotta believe Maine isn't far behind, only because, these border communities, the demand is such. Just take into account Rockingham County and the pricing in Rockingham County. If somebody can crest over the line and go to into Maine and find something more affordable, they're going to do that. So I think the demand is just as good there, Dan. I'll give you an example. We had clients of ours this past week that were looking, they sold a fairly large home in the state, and they were looking to move out to the coast. And they ended up buying in Newburyport because they wanted to be, their first choice was Portsmouth. And Newburyport has sort of that same kind of feel, if you will. But pricing was less in Newburyport than it is in Portsmouth. So the same home or the same type of home was significantly less. So I think the markets are getting, the state lines are getting blurred a little bit because they're more willing to get into the house that they want, and the state that they live in is a little bit more blurred because of that.
Great. I think you kind of answered a little bit of this in your presentation. Any advice on selecting a realtor? I think you kind of talked slightly about that earlier.
Well, the answer I give you would be heavily weighted, wouldn't it, Dan?
What would you recommend to prepare for staging a property?
That's a really good question, because oftentimes people come into this staging conversation and they think, oh my God, I've got to get rid of everything on my walls. I've got to take furniture out of the house. I've got to buy some things. And they think they're going to go through a major property renovation to get their home ready. And that just isn't so. And as a matter of fact, there's a school of thought out there now that people aren't looking for a house that's been completely depersonalized, because that sort of, it almost takes the soul out of a property, if I could be so bold. We want the home to show in its best light. And sometimes that really doesn't mean putting more things in or taking everything out. It might mean rearranging some things. It might mean where there's, 50 pictures on the wall, getting it down to 10 or 15. It is not as arduous a task as people think. We literally take people through the critical zones of a house, and I'll give you one example. We start at the outside, because the first zone of the house is the approach. People make all kinds of decisions on their way into the front door. So if they're walking up the walkway and there's bricks misplaced, and they get up to the front steps, and the deck of the stairs needs painting, and the front door has got a little bit of TLC needed, people start to make those subconscious decisions right from the beginning, thinking, well, if they judge what they can't see, Dan, based on what they can see. And so sometimes it's the small things and not the big things that make a difference. So we just say, get with your professional ahead of time.
This is a very interesting question as well. And a lot of great questions. Thank you, everyone, for putting the great questions into Bill. We have a few more minutes here.
Yeah.
Do realtors always set up a situation to create maximum bidding? They indicated this was not done when they sold their home in Chicago in 2001. I guess they wish they maybe should have done it.
Yeah, a lot of that comes down to the pricing strategy. And so, because what we've noticed, for example, there was a property that came on the market last year. It was $2.5 million. We've gone with a different company, and they didn't really get any traction. And so they came to us, and our advice was, I'll simplify the story. We said, really price it at, it's 2.5, it didn't sell. Let's price it at 2. And we priced it at 2 and got 2.25. Now, so essentially, which is right where they want it to be. And so sometimes the strategy might be, you want to price it so that you bring in maximum exposure. And then that can lead, at least in this market, to multiple offers. I think it really comes down to the marketplace. And in the current market, it has been designed more or less to favor multiple offers because of the fact that there's not enough inventory. That might be different in a higher inventory market, but so I don't know what Chicago was like in the early 2000s, but I will tell you this is that the phenomenon of many multiple offers, meaning 10 offers, 20 offers, has really been the case in the last 3 years.
Perfect. This is a good question, kind of also relates a little to Riverwoods as well. If one knows or is planning on moving, how far ahead should the home go on the market? Does it depend on the value of home? And then my kind of follow-up question to that is, in Riverwoods, if someone was moving in, 60-day closing from a time of an offer to moving in, how easy is it to sell a home in a 2-month cycle?
In the current market, pretty easy. And the best advice that I give our clients who are contemplating selling, whether it's in a month or in 2 or 3 or 4 years, is we want to be prepared as your representative when you're ready. And so, because when you're ready sometimes happens in a hurry, meaning they might get a call from your community that says, hey, we're ready for you. And then all of a sudden they've got to engage with their real estate professional, and it might take 3 to 4 weeks to pull everything together to go on the market. And so we do a lot of the dirty work ahead of time. We'll make suggestions on what the property is going to need to look like. We get a lot of that paperwork out of the way so that really, for instance, we include in our marketing, we include a floor plan on every single listing. Well, the floor plan isn't likely to change if you're going to sell your home this year, Dan, or whether you're going to sell it next year. So we can get that floor plan done, and we just have it in our file, and we get lots of things done in season. So spring photographs we take in the spring. Now, if you go to sell next summer or next winter, it's helpful to have spring and summer photographs to be able to show the customers. So we do all of that stuff so that when you're ready, you're prepared, if that makes sense.
Sure. I know recently in my neighborhood, a home went for sale and they did drone footage. Is that something you're seeing a lot more frequently these days as well?
Yeah, in some cases, what we'll do is we do drones. We do a thing called Matterport photographs, which is 3-dimensional floor plans and photos as well. It requires a special camera to do it, but sometimes still drone shots are really valuable because you might not need a drone to take you and hover over the house, or a still photograph from a drone may be the answer. And so we take every single property on a case-by-case basis. It isn't more photographs necessarily, it's high-quality photographs that's important.
Right. I'm going to answer one question, then I'm going to give you one to finish up on, since we
have
a couple minutes. This question came from me, I guess. What percentage of Riverwoods waiting persons or people or prospects are not living in New Hampshire? I would say our general capture ratio is generally in the greater Seacoast, northern Massachusetts, southern Maine area. But clearly we have a lot of future residents that are living outside of the even New England area, all the way to Pennsylvania, New York, California, Florida, Texas. So we really are capturing people from around the country. Generally, they have a reason. Either they grew up in New Hampshire, New England, have family here. So there's something to draw them to this area in that particular case. And this is your last question, Bill. I'm going to leave it as we kind of go a good consumer question in this particular case. And now I just kind of lost my question. Deal with companies that advertise on TV to buy your home with no updates, changes, or closing costs. Since we are really good about educating our future residents, how do you answer that question?
Well, I'm sure these types of buyers might serve a certain market. I don't necessarily advise against it, because what you're doing is you're trading convenience. Somebody comes in, you have to do nothing. They write you a check. Now, that convenience is traded for dollars. Just clearly as I can say it. They're not buying the property just to add another property to a portfolio unless they can do it as an investment. Most of the time they're buying it so they can resell it. They will give you the convenience of an immediate check in trade for a reduction over what fair market value is. And they're not looking for, 5 or 6 or 10% below market value. That's a generality, but I'm just here to tell you that television advertising to buy properties for cash with no inspections and no other fees if it's too good to be true, it's too good to be true.
Well, that's a great way to end today's webinar. Some really good advice for everyone out there. So I want to thank Bill for all the great detailed information, all the stats. Clearly the market's very, we need some more inventory to help everyone out here. And again, if there's people that have questions on Riverwoods or for Bill, certainly reach out to your sales counselor at riverwoodsgroup.org and we can get those questions answered for you in the future. But again, thank you for attending today. Wish everyone a wonderful spring, first few days of spring here, and happy home sales to Bill and everyone on the call. Have a great day.
Thank you.